Peter McGuire joins us now, and China will be coming out with their GDP data. Peter, good morning. Thank you for joining us. Are we in for a positive surprise from China today? Do you think world is watching out for that data? Because that's the first country which got into COVID, the first country which came out of COVID.
Well, definitely they're looking. Good morning. Look, first off, yes, they are looking forward to those numbers. They're probably disappointed, I would say. And no doubt the world is very conscious as far as the ratcheting up across Europe and the US and, of course, UK and China coming out the other side. They possibly were looking at that 5.5 number, hit 4.9, so it didn't hit expectation, but it's still not too bad. And can they perform at the same level going into this quarter?
Within the GDP breakup, Peter, what would be the main interest for China's GDP data? Will it be the export growth or will it be the domestic demand? Because they both are crucial to understand that what is the lay of the land for such a large country like China.
Well, that's a very, very wise point. I would say that first off, you've got to look at domestic demand. I'm not sure whether you're going to see demand destruction continue across many of those mature markets and that big export market, the likes of the US, the likes of certainly Europe and other markets due to COVID. So it could be internal demand as the first point. And then let's see how we are come January, February as far as COVID and whether the winter has decimated the market with the sort of numbers that you're seeing in France at the moment and the UK and certainly the US, then it may be a very bleak market for exports over the next matter of months.
Okay. Peter, how exactly do you think the US presidential outcome will impact the trade relations? Let's look at both the scenarios. Trump comes back, and Biden or Trump's comes back, or Trump loses. In both the scenarios, China is going to be the center point of how the global trade negotiations would move. Are markets nervous about the trade war? Are markets nervous about the relationship between the Americans and the Chinese?
Absolutely. The markets, I think, are very nervous. They're conscious as far as President Trump's ongoing rhetoric as far as COVID and the relationship souring through that southeast part of the world as far as South China Sea and just the ongoing issues that he raises from intellectual property theft all the way through to trade and how America needs to be rebuilding through manufacturing and all coming back on shore. So there's the first part. The second part is if Biden wins, then I think it's going to be very much a hands-off approach. He's had a long-standing relationship with China for decades, and I don't think will upset the apple cart to the likes that what Trump is discussing at the moment, or going to be a retaliatory action due to the position that America finds itself in with COVID.
Okay. What's the outlook on commodities, Peter, in light of the recent data and the kind of move that or the optimism that we're starting to see on that front?
Well, Arbor, I think, crude, let's touch that one first. Crude's been choppy. It can't really get above that 45, seems to have nothing there to push it under 38. So unless we see something dramatic happen from Mother Nature in the sense of hurricanes across that Gulf of Mexico region or something erupt through the Middle East, I really think that it's going to stay at this sort of number in the short term. If you're looking at the likes of gold, it's been a pretty interesting trade, very volatile and very dependent on where everyone sees the US dollar index. There's that part. And then, of course, if more stimulus comes to the table, then I wouldn't be surprised to see gold take another significant leg up from here. Copper, not much happening, and there are other markets to make a dollar on besides trading copper at the moment.
All right, and what about steel? Because that's where we saw all the action last week.
Sure. Well, yes, I mean, that strong demand naturally coming out of China. And of course, what you're going to see, Arbor, over the next, I think, years to come is the rebuilding and infrastructure spends of major governments across the world, re-engagement as far as employability. Secondly is rebuilding. And that demand picture, I don't think is going to soften in the short term. So I think steel's not a bad place to be. Probably iron ore as well. That's performed very, very well. And that whole sector has probably got a very rosy decade ahead of it from really industrial demand. So yes, it's probably not a bad place to be if you're a miner looking forward into the next 3 to 5 to 10 years out.
Peter, what's the outlook on the dollar index as well, which slumped to their 2018 lows earlier this year, which of course led to commodity prices driving up? But is there some sort of a clear direction?
Well, it's been very choppy, Ivan. We're around about that 93.8 at the moment. That may, depending upon the election, I think leading up until November 3, I wouldn't be surprised to see it punch above 94 handle as far as that US dollar index. It's very choppy. And I feel as though leading up to the election, it'll be a little bit of dollar strength due to possibly you're going to look at stimulus and get that over the line. Second part is just leading up to the election as a whole and the weakness across the fabric of Europe, those COVID numbers, France and so on, really, I think will weaken the euro and possibly strengthen the dollar another 1 or 2% over that next week or two. So that's where I think the market's going to be looking in the short term. As far as pushing that out, let's see what happens to the election. Let's see if Trump wins, Biden wins, and what impact, if Trump loses, whether he rolls across from a constitutional side and does something in the Supreme Court. So that's what everyone's expecting. So I don't think it's going to be a rosy picture for commodities, currencies, or equities over the next matter of a month. I think volatility to remain.
And would you agree, Peter, that, the fact that we've had a bit of mixed economic data coming out of the US and, those comments from the Fed officials that an increased need for stimulus in order to boost recovery in the US is going to be need of the hour?
Yeah, absolutely. Look, every country's got to boost themselves as far as the unemployment picture. Naturally, as from an infrastructure perspective, the old story as far as rebuilding nations, and there's a lot of old technology and infrastructure across America, really across the world. So that demand picture, I think, is going to be fairly strong. America's in the same position, and from highways to bridges to subways, you name it, it's going to need raw commodities and the next part as far as manpower to make those things happen. And it's just a rebuilding. We've never seen this type of disruption since the end of World War II, and really it'll need nearly a Marshall Plan to get everyone back on track. I think we're only at the starting phase as far as COVID, and there's a lot of, I think, worse news ahead of us. So I think 2021 is going to be a very bleak year for markets.
So Peter, I'm going to give two scenarios. Scenario number one, we get a decisive mandate for the US presidential election, whether it is the Democrats or Republicans, we don't know, but we get a decisive mandate that who will be the new boss of White House. So what will happen to markets then? And scenario number two, we don't get a decisive mandate. The result is prolonged till end of November or till first week of December. In that case, what will happen to commodity markets?
First off, I'll answer the second question first. There's no reason if Trump, I think, goes from a constitutional side and he gets beaten, I don't think you're going to have it sorted out by the start of December. I think it'll take a matter of months. This will be tied up in courts. All of Trump's given his, I think, his mindset as far as where he's going to play this. So there's that part of it. So I think it really causes disruption to markets and puts a level of fear, which in turn I don't think is going to do any market any good. It'd be a great time to be short. The second part of it is if Trump gets in, I think it's going to be onward and upward. He's been very, very strong as far as performance over his tenure. There's no doubting that. We've seen Dow, S&P and NASDAQ at nearly all-time highs or at all-time highs. So I don't think that's going to change. If Biden gets in, then everyone's worried from a trading perspective whether we're going to see a downturn as far as US equities. So that's really the differing views from a Democrat versus Republican position of power and who controls the Senate and the Congress. So there's many moving parts to this.
Okay. Peter, second, when will markets genuinely start getting worried about the US debt? The fact that interest rates are low and they will be low for a long period of time, we forgot that debt is something which is you're borrowing from future and ultimately you will have to pay. How long do you think financial markets can brush aside this simple concept?
I've been in these markets since about 84, and they told me in around 90 it was a major worry and, you know, deficits, and I hear it again in 95 and 2000. Now 35 years later, I hear the same. I reckon if I'm fortunate to live another 35 years, I don't think they will have tackled it. I think we've got many years ahead of us as far as low to nearly negative interest rates. And I heard Jamie Dimon say something in the last matter of a couple of weeks. And Jamie said this: let's get through the virus. Then we worry about the next part as far as paying down debt and, you know, deficits and so on. The first part is let's get through it. And I think we're a long way from getting through it. With 57,000 people being tested positive yesterday in the United States, 32,000 in France, I think we're a long way from any form of finishing or finalising. So I think we've got to get through that pathway, and then we can really look forward to possibly chopping down deficits. But I don't know how it plays out. This is a new game, a new frontier, and maybe it's just stacked debt on debt.
Peter, thanks so much for joining us this morning. All right.
Thank you, Abba.